It may be advisory services, it may be financial lending, it may be a combination of these different things, but find out what you need, find out what you offer, and don't let a no stop you.
What are the various stages of financing a venture or a company?
So the first stage, I would say, is the sweat equity. When you're really formulating your initial business idea, and you're working for free at that point. Typically, you're not going to get money from anyone until you've got a business plan that makes sense. So you're going to have to put in some unfunded time at the beginning, working through what do you want your business to be, how is it going to grow, what sort of things do you need in your business to get it started and get it going. That stage is usually funded by having a job. So you're working at a job, and evenings and weekends you're working on your new business venture and how you're going to get that going.
So what do you do? What do you do about that? How do you go about proving your assumptions?
So it varies a little bit depending on what type of business you've got, but you want to show that whatever it is that you're planning to build, somebody's interested in buying it. So if it's a retail type business, you might do that by researching other retail businesses that are similar to yours to be able to show that your ideas are viable. If it's a technology business, you might build a little prototype of what it is that you're planning to go to market with, and you go out to potential customers and gauge their interest to see, do you like this? Is this something you'd pay money for?
Okay, so now we've proven our assumption. Catherine, are there grants perhaps as an initial stage, or for Virgil?
Sure. So for Aboriginal entrepreneurs, they may talk to their community member, their EDO, their band manager about some business sponsorship funds, business equity funds, other programs that might be available to community owners, or they might talk to the Aboriginal financial institutions about some combination of equity, non-repayable contributions, if that's available, as well as a startup loan. And again, they can come to BDC and talk to us about a startup loan.
Okay. So now we've gone from grants, and I suppose we're getting into love money.
Yep.
What's love money?
So love money, or friends and family money, that's going to people you know, and seeing if they're willing to put some money into your business. And if you are lucky, you know people that have lots of money and can give you a good chunk to get going. Most people don't. So you're going to maybe several members of your family, several different friends, and they're all putting in a little bit of money. And they're doing it because they love you and they believe in you and they want to see you successful.
So at the end of your love money, what should you have accomplished?
So it depends on how much you were able to get, how far you can go with that. Ideally, you've gotten far enough that you've actually been able to make a sale. So in the early stage, you tested that someone would pay some money if you had this. You want to get to the point that someone actually did pay some money because you did have it. So you may not have enough money to scale your business, but you can sell one or two and show that someone was willing to actually part with their cash for the product that you have to offer.
So Catherine, now we've made a few sales with our love money. Is this time to come to BDC?
It certainly would be, and early on in the conversation, because we can, as you're working out your business plan, there's lots of advisory services we can provide to help work out that plan, the details, the marketing aspect, the financial aspect. And a lot of these things, we're talking about the money and where it comes from. It happens at the same time. It may not happen and develop in stages. It may be there's a little bit of personal savings, there's a little bit of injection of love money, there's a small equity grant we're able to access, as well as a small commercial loan. So, and the combination of all of that sometimes happens at the same time. It doesn't always happen in a nice, neat package in a timeline consecutively. Sometimes it's a lot of moving parts for the business owner.
Understood. Before we go into angel investments or venture funds and so on and so forth, I'd like to talk about the at-risk. What should a person expect? How much should a person be at risk before any one of the institutions or any one of the groups look at it?
Mm-hmm. Well, that's an interesting question, because the different institutions have their own way of evaluating a potential project for financing and their own risk levels. You have to have some kind of equity as a business owner involved, as well as to add to the commercial loan. So it's a combination of those things. We don't really have a set level. We really look at the overall project and the merits of the project and how great of an idea this is. What are the skills and capabilities of the business owner? Should we take that additional risk because this is a great project and it should move forward?
So if I'm a Aboriginal and I live off reserve and I have a home, I may be able to use some equity in my home. But what happens if I'm Aboriginal and on reserve?
Yeah, for sure. There's lots of different financial institutions who have made lending on reserve and where you don't have the same collateral evaluations, but it certainly doesn't mean that lending on reserve can't happen. It happens all the time, and it continues to happen in greater levels. So there are mechanisms that each institution puts in place to make that happen. I
imagine those institutions must also be looking at the individual a lot closer than they would, for example, if there's an asset behind the loan, such as a home or something.
Yes, when you come right down to it, the business is fully dependent on the skills, aptitudes, attitudes of the business owner. So how well the business owner is prepared to run this business is going to make a big difference.
How about the credit history of this individual?
Certainly that's what a lot of financial institutions are going to take a look at in evaluating the overall piece, and some institutions put a heavier weight to that measurement than others. So really it's getting to know your own institution that you're going to be dealing with and what they're going to be looking at, and preparing yourself so that you're putting your best position forward.
Jennifer, Angel Capital, where does all that fit in?
So angel capital is different from a loan. So typically with an angel, not always, there are different kinds of angel investments, but typically with an angel, they're buying a portion of your company. So it's not a loan, it's an ownership. Right, so I'll give you money and I get X% back. So we come to an agreement on how much your company is worth. So let's say we say your business is worth $500,000 and I'm going to give you $100,000 and I'm going to get a fifth of it. Anyone who's watched Dragon Den knows that it's typically a discussion between how much of the company you get for how much money. And that's really the way angel investing works, is I'm going to buy a portion. So it's not the same as a loan where you're going to put it up against some level of collateral like your house or something. It's a portion of the business. And the reason I'm going to put money in and get a portion of your business is because I believe that your business can be successful. That let's say we agree it's worth $500,000 now, that in 2 years it's going to be worth $2 million, and my portion is going to be worth 4 times what it is today, and your portion is going to be worth 4 times what it is today. So that's where the angel investment comes in. We're betting on the growth of the company.
Okay. What's the difference between angel investment and venture funds?
So one of the differences is angel investment is individuals' money. So someone's putting in their own personal money in, and so angel investing tends to be more personal. It's my money as an angel that's going in, and I'm going to do it because it's an area that I'm passionate about, or it's a person I'm passionate about, or it's maybe it's the city I'm passionate about and I want to invest in growing the city, or if you're on reserve, I'm passionate about making the reserve successful and I'm going to put my money into making the reserve successful. A venture fund is usually corporate money. So there's a fund manager, but it's not their own personal money. They're managing a pool of money that usually came from other institutions, financial institutions or companies.
Such as the labor funds, for example.
Yeah.
Catherine, let's talk about leasing and factoring as alternative funding. Does BDC do that? And if not, what do you think of it? Is that a good way to go?
Well, it's certainly, I'll answer the first question. No, BDC doesn't do leasing. So it is an option that a business owner certainly become aware of all the different options to financing. This may make perfect sense for a certain business owner in a certain industry and what their needs are. And then again, maybe it's not a good fit. So really it's becoming aware of all the different services and options there are out there for financing either a certain project, an expansion project, a certain expansion into a new location. What are all my options? And having those conversations with your trusted advisors, which certainly includes your everyday banker.
Okay, so it's a good place to start is going to a banker. And so now let's move on to from startups to buying something that is in existence or being able to get a distributorship or a franchise. So where do we make the difference here? Where are the differences in terms of various sources of funds?
Yeah, sometimes when someone's looking at franchises, there's a strong partnership and alliance between the franchisor and the franchisee. So and sometimes financing is part of that conversation as well. We certainly finance franchise operations. We've done it lots, very successful. So again, it's looking at the options, becoming aware of what you need, and having those open conversations with all the different possibilities for your business.
So, are angel investors interested in franchise?
Not ones I've worked with.
Or not?
There might be other angels that are, but I have never worked with one.
Okay. And I suppose if someone is interested in a distributorship, then you're talking about funding the inventory. What's the requirement for that? Is it strictly the inventory, or is it the individual, the inventory, and so on?
Yeah, so we would look at overall the business situation. What's presented itself to the business owner. We can do just inventory. We can do inventory, receivables, working capital. We can do real estate. So there's a lot of different specific loan structures to meet the business needs. So really, coming to BDC, we're really good at growing companies. We're a long-term lender of working capital. We're a long-term lender in the marketplace. We're there to enhance and collaborate and work with our other financial institutions to make good projects move forward if that's what the financing need is. We look to partner as a first question with our clients all the time. Of who is your everyday banker, who can we work with, and how can we make this happen for you?
Good. Well, I suppose the last question is vis-a-vis, I want to buy an existing business. What are the differences? Can venture capital come into my existing business?
So venture capital typically won't come into an existing business. You will get private equity that will take existing businesses and take them over, which is different.
So an angel investor could potentially be a funder.
They could, but so angel investors are typically looking at growth businesses because you want to put in money now and get a multiple of your money back in a couple of years. So it's not really a loan-based structure. So if you're buying a franchise or buying an existing business, it's typically on a certain revenue stream, and it's easier to get a loan than it is to get an investment in that, unless what you're doing is you're taking over a business and you've got a plan that if I run it, so this is a single location business or a 2-location business, but I think I can run it and I can turn it into a 20-location business. So then you're coming to an investor with a growth plan on how you're going to take this existing small business and turn it into something much bigger.
So in closing, why don't I ask you ladies to part with some wisdom words for the entrepreneur or the would-be entrepreneur that wants to get going?
Yeah, certainly. Well, be prepared. Think out your plan. keep that passion burning for what you want to achieve. Ask the questions of all the different resources. Find out what's available to help you. It may be advisory services. It may be financial lending. It may be a combination of these different things. But find out what you need. Find out what you offer, and don't let a no stop you. Keep going.
Jennifer?
Yeah, I would definitely not let a no stop you. I would also say think about how passionate you are about what you're taking on. Starting a business and growing a business takes years. It's not an overnight thing. So you want to make sure that the business that you're starting is one that you really want to be involved in for years, and that you can show that passion, that enthusiasm, and make it successful.
And on those words of wisdom, we say thank you.
Thank you.